Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to talk about the pound versus the dollar, as this is our kind of chart of the week that we've been looking at in our market outlook. So we took a long position last night, so if I go down into the 4-hour time frame, you can see our position. Now our position, we're only targeting a 1-to-1 risk to reward profile here just because it is counter trend currently, but we are using the commitment of trade reports as our confluence to entry. So what I'm looking at here was the price coming back into this supporting point where I expect a continuation move. So we had that nice move up yesterday, pull back in to the support, and then looking for the continuation to move on today as price heads back up into the sort of those 124s. So what I wanted to do was just talk a little bit more about the commitment of trader reports, as I mention it quite a lot, and some of you ask a few questions about it on the YouTube comments. So just to put it simply, what we're seeing in the markets at the moment, the commercials are long contracts are increasing, and they are the ones that look for key reversals in the market. They look for value in the market. So a good example is if you go look at the gold charts at the moment. So their short contracts are increasing at the minute because the value of gold is increasing. Okay, so they see value. The non-commercials, short contracts are decreasing. Now non-commercials are key for trend following, so typically they are large institutions that trend the markets, that follow big massive trends, which is what we've seen on the pound since 2018. So with them decreasing their short contracts and commercials buying, it's key for a reversal. So I'm expecting some kind of reversal to happen down in here. We've placed the stop loss below yesterday's daily candle low just to be safe, as it also below this left shoulder in here. So we may actually see a inverse head and shoulders, very much like we talked about on pound CAD form. So we've placed our stops nicely below those lows just in there. Now what I have done, if I go to a weekly time frame, is highlight the past couple of times that the pound has formed this COT signal. Okay, so what we've seen back in 2017, the market has rallied previously, and also back in 2013 you can see with the same conditions the market has rallied. So we're looking for the same thing to happen back here. Nice down into these lows is a good demand zone to look for those buying opportunities. So just thought I'd explain that in a little bit more detail. Hope that has helped with any questions that I've seen lately. This has been John Kibler, head currency analyst at Blueberry Markets. Thanks for watching, and I'll speak to you soon.